Boom, we are live, ladies and gentlemen. It's a beautiful sunny day out in the back of the jungle here, and I'm going to be doing a short video because I want to go jump in my private waterfall. Yeah, that's right. There's a waterfall on my property. I found it, didn't realize I owned it. Actually, I'll have a whole entire half acre of property I own that I didn't realize I owned. Thank God for the pandemic, because otherwise I wouldn't have stuck around here to go mushroom hunting to find out that that other chunk of property that has the waterfall, that's mine. Anyways, the point of this is we're going to be taking a look at the Wyckoff idea again, and we're going to go over this because you can never go over repetition of pattern too much. So we're going to dive right in. We're going to take a look at some of the private PDF that we've made for all the private bear members, and we're going to go over it because I know now with so many new private bear members that have signed up, I want to just focus on this Wyckoff analysis and kind of ignore everything else and all the noise of the people in the comments that don't seem to understand how TA works. So remember, let's dive in. Learn how to trade, learn how to invest, and if you do those things properly, it'll be a game changer for the rest of your life. And it does not happen overnight, but we can go and move quicker because of the particular place that we are in the market. So even though I'm not convinced that we're entirely in a bull market, let's go over this Wyckoff phases again, okay? So what's important to understand? Most of the importance of understanding the Wyckoff is actually in the last phases of D and E, because this represents the most successful area for us as smaller fish to make trade entries. Now, I started building my first campaign here in Matic around 190 to around 200 Satoshis. It took me about 7 days, and I took and acquired my position. When we ran up here to the top, I skimmed a little bit off just so, like today, I can buy more. And what this is turning into is a secondary LPS. Now, these are really, really important areas because this is where we're shaking out all the weak hands again, coming to this middle part of the volume profile and the visible range. And we're likely going to continue to climb up this. So even though I'm not convinced we're in a bull market for Bitcoin right this second, we are in a bull market for a lot of the other tokens. So let's use Algorand as a secondary example now. This is where Matic was, right at the bottom of this box. We see a move up, a retest. This is your first LPS. In this area here, this is known as your backup. This is actually one of the strongest and one of the easiest areas to enter as a trader, and just limit with a stop loss here. Basically, your stop loss would be effectively the box itself, because the movement up out of this range becomes quite noticeable. So again, we can go over this in a few different areas, and I'm going to do it kind of quickly today because I do, like I said, want to jump out of inside and go out to outside where things are much sexier. So let's take a look at where this has already happened. So we're going to use Cardano as an example, and we're going to go back in time, and we're going to be time travelers for a minute. Here we are back in May. Okay, now I'm not going to draw this out totally, but here we saw our spring in box C, our change of character, our first LPS test at the point of control, known as the POC line on our volume profile. We saw the spike up above the box and the final backup and LPS tests. So let's look at this. So the Composite Man, and I'm going to read for you guys here. I hope this is valuable to you. All the fluctuations in the market and all the various stocks should be studied as if they were the result of one man's operations. We will call him the Comp Man. And in theory, he sits behind the scenes and manipulates the stocks and cryptos to your disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it. And the reason this is important, guys, is because it's understanding the move of a market cycle. So we've been in an accumulation phase. Things have been oversold. We've been bottoming out, and we're moving into a markup on a lot of these tokens. Here is the lower oversold area on Cardano, and here's the markup. Big, huge change of character once you leave the box, right? Huge potential once you leave the box. So we saw that more than once. So let's take a look at waves. This was a trade that came out in the private bear den not long ago. And for those of you that want to join a private group, go ahead. It's a mastermind. It's not a signals group. That's all I'm going to say about it today. I've told you guys enough about it already. We're going to, well, actually Quantum was a nice one here. We had a final LPS test, bang, and it started to break outside of the box. Although that's not what I wanted to show you. I do want to show you waves. And again here, what we're trying to do is go over the understanding of these market cycles so that it becomes blatantly clear. Once you see this pattern, you'll start to recognize it quite frequently. So waves is actually very similar to Matic. We see an ascending channel through the box. Here's your final LPS test on D, right at the point of control. Again, this red line that comes through my volume profile area moves through the top of the box to the top of the channel, And then check this out. This is this is when they become powerful, and this is why often waiting for these final backups is a much better place to play, because you have limited exposure time. Yeah, an enormous gain. So one of the fun things, if you don't know about TradingView, I can't actually edit this. There is no edit button. Once I draw up a trade and I make my targets, there's nothing I can do about it. So here are my secondary, and well, I just have a first and a secondary profit target range here as well. So I do suspect waves will continue higher. So even though I'm not convinced we're in a bull market for Bitcoin yet, we're actually in a bull market for a bunch of other tokens because of their ability to move. So let's look at Stratus. Stratus here, we'll give out a shout to Arcane Bear Den Jerry for drawing this one up. We saw the final LPS test right here. And look, we're probably actually creating a secondary LPS test as well. So these are important because when we go back and we look at these Wyckoff laws, well, what do we want to do? Okay, well, this chart methodology is based off 3 fundamental laws. So this is going to help explain those trends as we move through them. So first, the law of supply and demand. This is the area of price that moves. And as the trader can compare prices to the volume bars, establish the balance between that supply and demand, just as we saw. Let's go back to waves here. Excuse me, I could open WAN too. Yeah, let's open WAN. So here we see the spring in phase C, and here's your LPS tests, right? These are very important because these are showing that the weak hands are all gone and that the market operator is able to pump the price up with very little volume, right? So what you end up seeing are these big changes of character off this bottom LPS box. This is a huge move, right? So, well, why does that work? It works because of the law of supply and demand. Once the market operator has shaken out all the weak hands, which there are a bunch of, judging by how many people left comments about their lack of understanding of technical analysis and the lack of their understanding of the value of my time, I want to take a look at the next aspect, which is the cause and effect, which is this is the force that informs the accumulation and distribution within the trading range, and the subsequent up and down trends have a cause. So basically, Market Man will signal his position by making these big run-ups, so that when you see stuff like this is when the YouTubers start talking about it. When you start to see these big gains, like, oh yeah, ALGO, you should have been holding it all year. Well, yeah, that doesn't make any sense. You would have lost a lot of money. It wasn't really worth your time, because it's much better to get in on these final LPS tests, right? Because once you see a final LPS, bang, right down to the 50, break outside the box. Pretty consistent. That's what we just looked at WAN as well, right? Okay, well, what about more of them? What happens if you just keep drawing these? Okay, well, here's Tron. Okay, Tron's final LPS was probably around 181. I think I drew this a little incorrectly because the box of C should be closer around the spike, but that's unimportant at this moment. So what do we see? Ooh, we dipped right below actually on the 50-day moving average. So don't get too confident about your LPS positions. Build a campaign. Remember, if you're just going and clicking buy and that's it, you spent everything you had to get into your position, you failed. You should take a week, 2 weeks, a month to build a position, become more confident, because look what happens as soon as this LPS test took place here, just a little bit below the POC line, a massive explosion outside the box of Tron. Now we're moving in for our final backup, and this is going to, again, likely create a big move out to this first area of volume resistance and secondary area as well, which is what we've seen multiple times, not just in Cardano, but let's take a look at Zilliqa again. We'll reverse into history time. We'll go back, we'll take a time traveling device. Things happen, right? And here we are back in April, and we're looking at Zilliqa. We'll just pretend that it hasn't blown up out of the box yet. Okay, we see our final LPS test, the backup, and this massive explosion that comes out here. Now the fun part, you get to imagine the Elliott wave count upwards potentially, right? And the idea that this is a new bull market, and you might even be seeing an inverse head and shoulders on this smaller time frame as well. So what does this mean? How do we use all this? Okay, well, let's look at the law of effort versus result, because this is the important part. It says get out more than you put in, right? Sounds simple enough. Buy low, sell high. Everyone says, buy low, sell high. It's so easy to do. It's not. It's not easy to do. FOMO is a real problem. You need to think to yourself, what can I do for maximum gains with minimum exposure, getting the highest reward for the least amount of actual effort that will allow you to increase and scale your portfolio wisely. Take your time. And as you're analyzing these trading ranges, really only look for these secondary and tertiary LPSs after the big sign of strength, because this is really going to dramatically help everything. So I'm going to go everything over here. So Again, I apologize that this is quick. I just have I want to get back outside. It's so sunny outside right now and gorgeous. I want to produce these videos for you guys too. I know. Thank you. Thank you for supporting the Arcane Bear. Thank you for being patient enough to go through and actually do your own homework and understand what this stuff means, so you're not asking me dumb questions. Not that I mind, I would rather be spending my time sitting in the waterfall with the beautiful woman, right? I don't want to answer your questions. Do the homework yourself, please. It's a way to save me my time. I'm just trying to help you guys get there too. So that's what I love about the Arcane Bear Den, is that it's actually a bunch of traders who are all learning and going over the same thing. So this becomes blatantly obvious, because when everybody's working together, we become more powerful, and then I have more time to go outside in the waterfall. So thank you guys. I appreciate that. So here we see the preliminary support followed by the selling climax, which becomes the low of our trading range. Then we see the automatic rally, this spike back up to the first area of resistance, and then we see the secondary test, the drop down to, again, our the first support range in our trading range. But more importantly, what we're looking for here is this test. So I'm going to read this to you. Using STs and springs, large operators test the market for supply in shares or cryptos at strategic points in a price advance, generally throughout the trading range. If there seems to be a considerable supply of these shares, the market is yet to be ready for some changes. The operator will therefore wait until the time is right, and in the meantime conduct a few more tests. A successful test has lesser volume of shares and anticipates that further increase in price. So here we have it again, the sign of strength. Sign of strength right here, this SOS area and the LPS areas too. This often takes place after the spring, proving the operator's previous actions useful, since it depicts a rise in the price relative to higher volume and increasing spread. The last point of supply and the backup are the most successful areas for entry. So here it says, after an SOS pulled back or a reaction case, it causes the price to dip back up and translates to the pulling the back support, which was formerly resistance. On diminished volume and spread, there may be more than one, despite being named the last point. We might see a few of these, as we were showing in both BAT and Matic in our other videos. So the backup point, this is probably one of the most lucrative points. The backup point is the typical structural element that precedes the substantial price markups and could be taken on in a variety of forms, including a new trading range at a higher level or a simple pullback. It has gained its name from the Wyckoff method enthusiast Robert Evans, who was one of the leading teachers of this concept in the 1930s and 60s. He used an analogy whereby the SOS first jumped across the creek, which is basically your moving averages and your EMAs, the price then of resistance as a result, and the back up to the creek, which represents the test for more supply around those areas of resistance for short-term profit taking. So I want to, again, we'll just go over this. Being able to recognize phases C and D, because this is where it is observed that is the easiest place. Investors who would like to initiate or add profitable longs to their position should take advantage of these excellent opportunities presented by the LPSs. So phase D and phase E is where we should be spending most of our time after the spring occurs. So let's go back and do one more example here, and let's use BAT. We'll use BAT as an example because it's one of the plays we are currently in. So here we see phase C spike down, right? So here's the kicker too. This is why you spend a month or 2 months building a campaign. You don't all just buy it once. Here's the spring down, and then here's the change of character. And then one more final LPS on BAT. We started taking our entries here in the private bear den. It took about 10 days between July 30th and August 12th to buy around 23 to 2200 Satoshis, and we see a massive markup. And right now we're experiencing the first of a second LPS. So here we can see on the 21 moving average on the 4 hour, bang, first LPS, bang, second LPS. After this one, we're likely going to shoot through the box and then come back and take one more test into box E, which is known as the backup. This is where most traders would want to enter, but I've been building my position here because I want to play like Comp Man. I want to spend 10 days buying here at a low. I want to spend 10 days waiting, chewing up a little bit there. And for those of you that were in the private bear den, when Bitcoin ran up, we chewed up a little bit more down here. And today we'll probably try chewing up a little bit more here. Why not? I still have capital. I still have fodder and the firing power to make sure that I can take this position. I want to play like Composite Man, which means I have months. I have a month or two to take my position if I'm going to get 100% gains. Are you kidding me? I'm not going to rush in, FOMO in, and just click buy wherever I happen to be in the price. I'm going to be very confident that I'm labeling, here's the LPS, here's your secondary test in the LPS and your final backup range, because that's how you trade effectively. You basically want to copy Market Man, this brilliant person who has infinite time and infinite money. Just very quickly, we'll go through. You've got ascending channels that move through accumulations, cup and handles that move through the accumulations, double bottoms, falling wedges, inverse head and shoulders, and this is just some of the stuff that we go over in the Arcane Bear Den together. Anyways, I'm going to leave it at that. Thank you guys for joining us. I really appreciate all the support. I'm really grateful for all of you guys working together, because again, I do want to spend my own time doing my own things with my life. So the fact that we all get to work together and you guys help me build this place to be how powerful it is. Give special shout outs to Brian and Jerry and Patrick and everybody else in there that's being supportive. And we've got a bunch of new members that are getting really good at charting these. We're sharing everyone's charts together because there's more of these than any one person could ever digest. So even if you don't join the private den, take this information you've learned, go out on the internet. You can find everything for free and just do the homework. It's worth it. I promise you. If you are brave enough, again, risk-free, no risk at all, $30 a month. If you're not happy, we'll give you the $30 back. It's not a big deal. I don't care about the money. I'm just trying to build that mastermind group where you have a bunch of people working together. And as we get closer to this kind of target range of how many subscribers we have, I'm going to be hiring a full-time writer for deep dives and helping book more podcasts. Hopefully, we've got Jared Tate coming on. We've got the guys from Everpedia. We're looking into chats with Band. We're looking into chats with the CEO of Algorand. So I hope to be able to bring more podcasts and deep dives for everybody as an extension of our willingness to provide valuable content in this ever-growing niche and space. Let's do it with the Arcane Bear. Give us a thumbs up, like, comment, all that things you do, or don't like it. I don't really care. It doesn't matter. But YouTube does. So like or don't like, or just don't do nothing. See you guys again on the other side.